All right, we're going to go ahead and get started here. Hello from New York and welcome to this Earnest Talk. I'm your host, Michael Maloof, Head of Marketing here at Earnest Analytics, the leader in consumer and healthcare data for companies and investors. Today, I have the pleasure to be speaking with Dan Frommer, founder and editor-in-chief of one of my favorite retail newsletters, The New Consumer. Before that, Dan was the editor-in-chief at Recode, Vox Media's tech and business news publication, and earlier in his career actually helped create Business Insider as one of his first employees. He's been the tech editor at Quartz, a reporter at Forbes, among other things, originally from Chicago, now based in Los Angeles. Dan is just a huge presence in the consumer retail space, and I am so excited to have him on to talk about his view on the state of the consumer in 2023 today, some of which is actually powered by Earnest data. So thanks, Dan. Quick housekeeping note for those listening, you can submit questions and we'll try to get to those answers at the end of the presentation. And please remember, sign up for Earnest Insights for more great content after this. So with that, welcome, Dan.
Thank you so much. Good morning from Los Angeles. And I'm Dan Frommer. I am the founder and editor-in-chief of The New Consumer, which I launched in 2019. It's a new kind of publication exploring how and why people spend their time and money, mostly through analysis and trends and forecasting. I also do some advisory work. You should check out newconsumer.com. If you sign up today, send me a note and I'll top you up with a few extra months of membership. My partners in this research that I'm presenting today is a venture capital firm called Coefficient Capital based in New York City. They invest in digitally powered consumer brands, including Oatly, Magic Spoon, more recently Lemmy and Kate Farms. Check them out at coefficientcap.com. What you're seeing today is a fusion of a few of my recent consumer trends reports. Twice a year generally, but actually 3 times this year, we publish this in-depth data-driven research looking into the minds and wallets of the new consumer. One of our great partners in this project is Earnest Analytics. So thank you so much for your view of the consumer through spending data, mostly spending in this report. Sometimes we use some of your other data. You can also view and download these slides from all of my previous reports, including the ones you're seeing today at newconsumer.com/trends. I'll show that URL again at the end, but all of this is available to read and download and share. Please share it. A big part of our research is what we call the Consumer Trends Survey. We've now conducted 6 of these surveys. Each of them is of more than 3,000 US consumers. Our most recent one was conducted this February. Our most recent surveys have also included 15 to 18-year-olds for a closer look at Gen Z, and our survey research partner is Toluna. Now I'm going to go through about 5 topics from our recent reports. First one is, we're at an inflection point right now. Health is wealth and food is medicine here in the US. In our recent survey, we asked 3,000 Americans to type in, not just pick from multiple choice, what they wanted to consume more of and less of this year. What they want to have more of this year, by far, number 1 is vegetables, followed by fruit, protein, water, and fish. What they wanted to consume less of this year, again, they wrote this in, sugar by far, also fatty foods, salt, carbs, processed foods. The big picture here is that most Americans tell us they plan to prioritize their health and wellness over the next year. What you're seeing here is people showing how much they prioritized it over the last 3 years in red, and then over the next 12 months in blue. So a much, I would say a significantly higher proportion of them plan to focus on health and wellness, increasingly looking forward than they did in the past. What are they focusing on? What are the aspects of their health they're most concerned about? Our survey says weight is the number 1 topic, as well as quality of sleep, mental health, especially for younger consumers. Almost half of Gen Z picked mental health as one of their top 3 concerns. Also things like stress, sleep, exercise, the type of food they eat. Most Americans in our research say they plan to exercise more this year. Many of them also plan to eat better, eating more vegetables, less processed food, sleep more. Also things like exploring recreational cannabis and attending therapy. Almost 20% of Gen Z, so twice as much as the general population, say they plan to attend therapy over the next 12 months. We've seen, of course, the trend over the last couple decades of quote unquote better for you food. Most Americans are aware of these trends. 2/3 say they're aware of organic foods. More than half are aware of things like probiotics, the keto diet, plant-based meat. What's interesting, though, is that among those who are aware of those, there's a pretty big range in how much they're interested in participating or consuming some of those trends. Food as medicine is something that we've been watching as a big one. About 2/3 of the people who are aware of food as medicine are interested in it. Things like adaptogens are a little more fringe or niche, you might say. Only 14% of people say they're aware of adaptogens, but among those, more than half are interested in consuming them. We asked people to rank their interest in participating in these food trends, but also how much they believe in the science. Is it real science? Is it pseudoscience? I guess the good news is that most people think that the science is at least halfway real. That's kind of the right end of this spectrum here on a scale of 1 to 5. You can see this full slide on the website, but let's zoom into that kind of upper right quadrant. These are the things that people have the highest interest in participation and also have the highest proportion in believing that this is real science. Again, food is medicine, this idea that what you eat is actually going to change your health, which, by the way, makes complete sense, but people really are buying into it. Also things like adaptogens, non-GMO foods, reducing seed oils. That seems to be something that people are talking a lot about right now as well. Organic foods, low sugar diet, and probiotics. Those two on the right there are the ones that people believe are the most real science. Here's another view of food as medicine. We worked with Square, the point of sale provider, to basically build a Square Analytics. What you're looking at here are purchasing trends at merchants that use Square point of sale for different products that have this kind of food as medicine or wellness connotation to them. You'll see that turmeric lattes kind of spike up and down seasonally. Perhaps they peaked in popularity around 2020, but things like mocktails, as people seek to avoid alcohol, seems to be edging up toward a new all-time high. Acai bowls are quite popular right now. It looks like they're gaining in popularity over the long run here. Avocado toast as well, but then you see something like green juice. It looks like the popularity of green juice peaked about 5 or 6 years ago, not doing as well as it used to. This is based, again, on actual purchasing data through merchants, mostly coffee shops and restaurants that use Square point of sale services. Lots of interest in immunity boosting over the past several years because of COVID. Probiotics are kind of the new, probiotics and energy are actually kind of the new immunity boosters. Instacart looked through their search data for the last several years and were able to show us that search queries for probiotic increased 30% last year over 2021. Also, significant increase in searches for organic and natural products. In our survey, we asked our audience, who do you think is looking out for your health and nutrition? Which institutions? Doctor, by far number one. About 3/4 of Americans think that their doctor is looking out for their health and nutrition, and you can see that proportion decline as you look through different institutions. Grocery stores, under 50%, online grocery services around 30%, big food brands 33%, and then lowest place, the US government. Only about 30% of people believe the government is looking out for their health and nutrition. Also the highest proportion of people who strongly or somewhat disagree that the government is looking out for their health and nutrition. As opposed to doctors, very few people disagree that their doctors are not, or that disagree that their doctors are looking out for their health and nutrition. I thought this was interesting. We asked people if you would rather feel 25% healthier or earn 25% money. For most consumers, health beats wealth. Young Gen Z, the youngest, I guess they are feeling pretty healthy, so they would rather have the money. But millennials and older, millennials are about split, 48%, but Gen X and older prioritize health. And overall, the mix of the population favors health over wealth. Next, moving to an adjacent topic, online grocery, one of the huge winners of the pandemic, not just a luxury convenience anymore, actually essential infrastructure. That spike you see on the left side, and this, by the way, is Earnest Analytics spending data showing the online share of US grocery spending was around 5% before the pandemic, immediately spiked up during early lockdowns, and has basically remained at levels quite significantly higher than before the pandemic, even through this spring. Some fluctuation based on seasons and other things, but certainly unlike other fields where online spending spiked up and then spiked right back down, grocery spending remains higher than it was before the pandemic, online that is. But the flip side of that is that growth is basically flat or down. You see the preposterous growth in early COVID years, but basically since then, the COVID bump is a real story for a lot of these online grocers. The growth just isn't there right now, and in fact, was declining in the teens year over year this spring. Again, this is the Ernest Orion transaction data here. Another view of this is from a different data provider called Brick Meets Click. I believe this is survey-based, so it's not quite based on actual spending, but this shows a slight increase in the month of April. But really zooming out here, this is why we are very interested in the online grocery market. It is grocery itself is $1 trillion a year market in the US alone, and 10% of that or so online is still basically a $100 billion market over the last 12 months in consumer spending. Why that matters, my background as a technology journalist, when attention or money heads online, it rarely heads to the same place it went offline. As advertising dollars digitized, they did not go to the newspapers and magazines, websites, they went to Facebook and Google. And we expect a share shift like that in grocery as well. We'll see what percentage of the market shifts, maybe not as dramatically as social media, but we ask, what is a grocery store? Online, it's much different. It looks a lot different than it does offline. There are a lot of different companies going after grocery dollars online, ranging from online native grocers like Thrive Market and Hungry Root to taxi, what you think of as a ride sharing app like Uber, restaurant delivery apps like DoorDash, meal kit companies, direct-to-consumer brands. Then there's this whole boom in ultra-fast delivery companies. I keep having to change the slide as they go out of business, so we'll see if there's any longevity for that. But Getir seems to at least be the winner so far here, and there's others, including Flink in Europe, that seem to have some longevity to them. But the point here is that as money heads online, it goes different places than it would offline. Mostly in theory so far, actually. The disruption in grocery is still pretty mild, actually. The majority of online grocery still goes through what you would call traditional retail. Pickup and delivery represent the vast majority of online grocery shopping. That new kind of disruptor model, the ship to home model, is less than 20% of the market, according to Brick Meets Click, and not really growing either, kind of flattish year over year. So far, we have not seen the sort of disruption in online grocery than we've seen in other fields, but still early, you could say. There's still a lot of room for growth. One thing is that most Americans actually tell us in our research that they like grocery shopping. It's around 80% or more, depending on the generation. Only about 15 to 20% of them say they don't like grocery shopping. And most actually still prefer grocery shopping in store, around half or more, depending on the generation. About a third or to a quarter say they prefer shopping online. And again, the actual spending is more like 10%. Why do people like shopping for groceries online? Convenience, still by far the number one reason. Saves me time. A lot of people don't want to leave the house. Many say it's easier. A much smaller proportion say things like it saves them money or it allows them access to specific products or brands or simply a wider selection of products. That said, these are small numbers, but because grocery is so big, this is still a lot of people and a lot of money. So there you've seen the rise of some very specific grocers focusing on specific markets, including that are actually becoming pretty big businesses because, again, 6% of the US population is still a lot of money going to a grocery store. I thought this was interesting. This is recent data from Kroger, the grocery giant. Consumer preference for online versus offline grocery actually varies very widely by category. Things like shelf-stable grocery, cookies, crackers, and snacks, more than 80% of people say they prefer shopping for these things online, as opposed to only about a fifth of people in store. But then you go down this list and you see things like dairy, people increasingly prefer buying those things in store. Fresh meat, more than, about 70% of people prefer buying them in store. And then fresh seafood, the top category, more than 3/4 of people say they prefer buying fresh seafood and almost 3/4 fresh produce in store. Makes sense. Still find it a little weird, the idea that someone else is picking my fish out for me. So again, the reality here is that only about 10% of the actual purchasing is happening online, but still preference and sentiment is very different. Many consumers and most in some categories want more from their grocery stores. It's easy to do your kind of mindless refill shopping online. So what do people want from their grocery stores that will provide them either some entertainment or some community value or some other value? More than half say they want more products from local brands. About half say they want more products from small and emerging brands or more healthy foods. Half of millennials and about a third of our overall population say they also are interested in a restaurant or bar to eat and drink in. This idea that a grocery store should maybe look more like Eataly than even Whole Foods. Another thing that is important to me is I've seen the kind of unintended consequences of consuming media by algorithm and the effects it has on the world. Increasingly, people are consuming groceries by algorithm, either through an online grocer's recommendation system, or increasingly they're doing online ads. It's called retail media networks. It's a big growth thing that they're looking for. But the net result is that more people are eating food that a computer recommended to them. So we asked our survey panel, do you believe that online grocers have a responsibility to recommend healthy food? Very interesting generational dynamic here. Gen Z, about 2/3 of them say yes, online grocers do have a responsibility to recommend healthy food. Millennials also overwhelmingly, I would say yes here, or at least significantly say yes, but their parents, Gen X and boomers, basically say no. More than half of them say no. Online grocers do not have a responsibility to recommend healthy food. Switching gears a little here, social media is the place for discovery and inspiration, especially for younger consumers. The average American spends about 13 hours a day using technology and media. This according to the consultancy Activate. You can see the biggest proportion of that is still video and audio, so television and a lot of radio and podcasting. Social video, what we would think of as the growth area there, is still kind of a pretty small proportion of that, about an hour and a half per day, relative to that 5 hours plus of traditional TV. But you can imagine that looks very different by generation, and also is probably the growth area. We asked our survey panel, do you feel like you live online? Younger generations, Gen Z and millennials who grew up with the internet, about half of them say, yes, I live online. We also asked, do you want to spend more time online or less time online? And those younger generations were basically equal. In fact, about a third of them say more, and about a third of them say yes. Older generations that did not grow up online much more interested in spending less time online. Digging in a little bit, more Gen Z and millennials say they feel most like themselves online than offline. Their online personas are kind of who they feel is most like themselves. I thought this was fascinating. About more than 40% of Gen Z and millennials also say they feel more valued for their talents online than offline. They feel almost 40% of them say they feel more appreciated online than offline. People mostly meet their closest friends offline still, but that is changing generationally as well too. About 40% of millennials say they met their closest friends online. Millennials say they feel more creative online, about equal for Gen Z, but still, again, different than the generations that did not grow up on the internet. And they feel similarly stressed out online and offline. Most Gen Z and millennial consumers say they consider themselves a gamer. Again, pretty stark generational differences here. And more than a third say they consider themselves a digital creator. Most of them, of course, are not actually making their earnings as digital creators, but whatever it is, they feel like they are. Looking at things like the future of entertainment and the future of TV, our research shows that YouTube is arguably underrated. In fact, we borrowed a question from the great internet stock analyst Mark Mahaney and asked, if you were trapped on a deserted island and could choose only one streaming video platform to access, which would it be? Looking through all the platforms, YouTube, not usually in these conversations, came out on top. 27% of Americans say they would choose YouTube over all the others. Netflix, which is the largest subscription-based service, of course, very close here, number 2. You could argue that those are probably the same. And then a pretty steep drop off, Amazon, Hulu, Disney Plus, TikTok, HBO, much lower in our polling. Also interesting, YouTube, impressively popular across generations. You would think this is just a Gen Z story. It is not. It is the highest proportion with Gen Z, but roughly equal for millennials, Gen X, and then slightly smaller for boomers. This is showing YouTube versus Netflix specifically. TikTok, though, we'll talk about now for a little bit. TikTok is most popular with younger consumers. About 2/3 in our survey say they use TikTok, much lower for Gen X and boomers. TikTok is very addictive. This is from a company called Sensor Tower that measures app usage based on a panel of Android users. And in their panel of users during Q3 of last year, TikTok users spent about 100 minutes per day in the app. YouTube, significantly less than that, 76. And then Facebook and Instagram, about half of the time spent in-app among Android users in TikTok. About a third, almost a third, open the app every day. So it is not just a lot of time when you do open it, but it is a daily commitment, basically, for about a third of users. By far the most popular number of days per month that people use it on Android. Again, this is based on Sensor Tower, which is measuring usage on Android. We asked our survey panel, again, if you're trapped on a deserted island and could choose to access only one social media network, which would it be? Very stark difference here. Millennials and older overwhelmingly chose Facebook, more than half of them. TikTok, number 2 for that group. Instagram, Instagram. Instagram, number 3. If you look just at millennials, Instagram and TikTok are both a little bigger, but still Facebook overwhelmingly number 1. But then look on the left side here at Gen Z, TikTok clearly number 1, Facebook much, much smaller, down at number 3, and Instagram kind of halfway between those two. Snapchat also does well with Gen Z, primarily messaging, but also some entertainment. Most Gen Z and millennials consumers in our research say they would choose TikTok over TV if they could only choose one to watch, traditional TV and streaming versus TikTok. Most Gen Z say they would take TikTok, about 2/3 to 1/3, more even for millennials, and then kind of directly the opposite for the generations that are less likely to be TikTok users. And For us, for our purposes, we see TikTok not only as an entertainment platform, but also as a platform for driving commerce. So we ask, where do you typically discover new food and beverage recipes? There's a pretty stark generational difference here. Gen Z and millennials, much more likely to say YouTube and TikTok as their top two platforms, and then Gen Z, definitely TikTok, as opposed to Gen X and boomers, where word of mouth, friends, still number one, cookbooks, television, and YouTube down there at number 4. TikTok much, much lower. We also asked where you primarily discover new food and beverage brands. Again, YouTube and TikTok much higher for Gen Z and millennials, specifically TikTok again for Gen Z. If you look at Gen X and boomers, they're much more likely to discover food and beverage brands in the store or on television or from friends than YouTube or TikTok. We also, this is from a previous report, asked where you primarily discover beauty or personal care products. This is a vertical where in-store discovery, because there's so much trial involved, is actually still highest among all consumers. But if you look at Gen Z alone, TikTok and YouTube are right up there. Combined, they are higher than in-store, as opposed to millennials and older, where there's a pretty stark difference here. In-store overwhelmingly the number one channel for beauty and personal care, brand discovery, friends, and brand websites next after that, but much lower. Half of TikTok users say they prepared a new recipe because of a video. These are actually pretty high proportions among other social networks as well, or social entertainment platforms, YouTube and Instagram, but highest for TikTok. Also pretty high, actually the highest for TikTok also among people we asked if they tried, if they purchased food or beverage products from brands they either did not know about before or did know about. TikTok, the highest platform for discovery there too, also for eating or drinking something they would otherwise not have. This is showing the virality of TikTok at work. Here's data from Instacart showing purchases of grocery ingredients from a viral TikTok video that was called baked feta pasta. You may have seen it or even cooked it yourself. And you could see as the video went viral, people were actually purchasing those products and cooking them. The spike is pretty profound here. Basically goes up almost 4.5x. However, not very long lived, several weeks, and then pretty much settled down to pre-TikTok levels after about half a year there or less than that. So TikTok very much in the business of making fads, but perhaps less so in the business of actually making long-term investable trends. Of course, we can't base that on one food recipe alone, but I think this is and certainly among other recipes that Instacart showed, this is the most profound. A lot of recipes don't spike like this at all. So interesting, but also a good view into kind of the short-term life of a TikTok trend. We asked our survey panel, if you wanted to find a recipe or meal idea, where would you search first? Google, still number one. Google, of course, the most popular search engine in the world. Google, still number one. Overall with consumers. YouTube, which Google owns, is number 2. However, if you look at Gen Z, TikTok actually is their top, is about 20% of Gen Z say they would search TikTok first, which you do not typically think of TikTok as a search engine. And about a third of Gen Z say they would search YouTube, Google. So a smaller proportion there relative to the overall population. We are, of course, as you probably know, and this will be a future research topic for us, going through perhaps a renaissance in search toward AI and chat-based tools. So no write-ins this year for ChatGPT, but we're keeping our eyes open for that. And in fact, almost half of consumers in a poll by Morning Consult say that they are either very or somewhat interested in AI-powered or AI-generated recipes. More than 40% say they're interested in AI-generated grocery lists. So a lot of change perhaps on the future of how people are shopping for food and how they're getting inspired for food with new AI tools in the mix. One last thing, we asked our survey panel of 3,000 plus Americans to type in, again, not choose from a list, type in the 3 people who most influence what they eat. By far, number 1 was Rachel Ray. There are a lot of kind of Y2K Food Network vibes in this list. Number 2, Gordon Ramsay. Number 3, Martha Stewart. And then Bobby Flay and Guy Fieri. And this ties in, also 100 people wrote in mom, basically, which was cute. This ties into our next section. There's a lot of excitement around brands founded by celebrities and creators. And we're curious, do they have a special advantage in the market? One of the reasons for this has been this profound increase in customer acquisition costs for e-commerce merchants. It's more expensive to grow and to exist as an e-commerce brand than it used to be. Part of that is Apple's iOS privacy changes. This, according to Common Thread Collective, which has a huge basket of e-commerce merchants. Celebrity brands have widely proliferated. We basically stopped counting at 40 here. Across different verticals, including apparel, spirits, food, CPG, beauty, and wellness. Venture funding has also grown for these brands, according to FabID. However, the crunch in venture that has affected basically every field is also so far affecting celebrity CPG brands as well. This year, the 2023 forecast is basically lower than it has been over the past 2 years, based on investments year to date. Why are there so many of these brands? It's not just customer acquisition costs. Many actors, musicians, athletes, and other celebrities want to be seen as more than talent. They're already very entrepreneurial and they want to be considered multi-hyphenates in culture. Social media allows celebrities and brands to build direct relationships with their customers at a scale that was simply not possible before they had those tools. There's no gatekeepers really in social media, other than you could perhaps argue Facebook and Instagram and TikTok. That said, they have been able to build these outside followings, and they do successfully drive attention and traffic. And the thinking perhaps is that this will make growth more efficient over the long run. And to the talent, this equity can have real value. The millions or perhaps tens or hundreds of millions of dollars that can come from an exit, selling your company, can far exceed and create generational wealth the way that one commercial endorsement simply won't. In our research, preference for these celebrity-founded brands skews urban and higher income. About 40% of urban consumers say they like celebrity-founded brands more than non-celebrity founded brands, and almost half of people in this 100 to 150K income bracket, according to our survey panel. It matters if consumers like or dislike the celebrity founder. We asked if a celebrity were to start a brand, how would that impact your decision to purchase? Much higher likelihood if it's a celebrity they like, as opposed to if they dislike or feel indifferently about. Of course, more people less likely to purchase from celebrities they dislike. These are not overwhelming proportions, but still you can see that relatively it makes sense. You could then make the argument perhaps that there's an unlimited amount of celebrity brands that are possible just based on which people who people like and who they don't like, but I think the market will prove that that's not the case. Some variance here in preference for celebrity brands by category. Highest, interestingly, in apparel and clothing, beauty and personal care, lower in areas like furniture and baby food. In the liquor category, about half of liquor store owners say they are intentionally stocking celebrity brands. This according to research from Drizzly. Second only to locally made products. About 2/3 of liquor store owners are stocking locally made products, and more than half are stocking celebrity-owned brands. Lower for things like organic or natural products, non-alc products, things like that. Well, are these brands more effective at attracting attention online than other brands? This is just one bit of research that we've done, but it shows that they might be. We looked at the Instagram engagement rate for a group of 23 celebrity-founded beauty and personal care brands. over a period of posts last November. And their engagement rate was several times higher than a basket of more than 500 beauty and personal care brands without celebrity founders. And it seems like a pretty high engagement rate. Again, I don't want to read too far into just one bit of research, but at least this showed that, yes, there actually is a measurable difference in engagement for celebrity founded brands. Whether that leads to purchasing or not, again, hard to say, but at least in terms of Instagram engagement, there was a significant difference there. Now, looking at some data from Earnest, these celebrity brands can actually really perform in the same ballpark as top peers. This is showing the growth rate of US consumer credit and debit card sales directly conducted with these brands as measured by Earnest. And you could see Skims, which is Kim Kardashian's apparel brand, growing faster than even, really prestige brand like Alo Yoga, growing faster than Lululemon and Spanx during this period. Also holding its own in areas like average transaction size, average orders per customer, and then total spending year to date. This again is through last fall, but you could see transaction sizes for Skims really in the same ballpark as Lululemon, slightly lower than, well, significantly lower than Alo Yoga, which is a very high-end brand, but still in the same ballpark. Is also in average orders per customer, and then total spending year to date, Alo the highest in this group, but again, Skims in the same ballpark. So I thought that was interesting. So we still believe there's a lot of promise for these brands, but of course, within limitations. 32% of US consumers in our research say that if a celebrity is an investor or backer of a brand, they trust the brand more. That's not a majority. It is a significant proportion of the population, but it's still, about a third. And almost 2/3 say they agree that celebrity founded brands only really make sense if the celebrity has expertise in the products they're selling. So are they relevant or not makes a difference. Quickly through the last section here, and then we'll stop for questions. Despite the uncertainty in the macroeconomy, Americans are spending more money than ever on food. And we believe that this new consumer that we focus on will prioritize health and wellness spending in almost any economy. This is fresh data from Earnest Orion transaction data showing that both online and in-store consumer spending overall is actually trending down year over year right now. It looks like it's around 5% down year over year in April. And this is across a very wide variety of categories. Had improved somewhat in the early months of this year as opposed to last year, but now trending down. That said, Americans are spending more money than ever on food, even adjusting for inflation. It's not just prices going up, but people are spending more. You can see kind of dips here during the Great Recession and the early COVID lockdowns. But one interesting detail of that is that restaurant spending has once again taken the lead from grocery spending. There was a period during COVID where obviously people weren't able to spend money in restaurants, but once again, people are spending more money in restaurants. And then Nielsen shows that another interesting thing is that even as inflation reduces overall or decelerates, food pricing and CPG pricing is actually still growing at a similar rate, slightly lower, but still now the delta is growing between food price increases and overall inflation. And in our survey, even though inflation has cooled, about 3/4 of consumers say that it still feels like prices have increased a lot over the past 6 months. That's up from about 2/3 in our survey last November. And consumers also say they expect to spend more money this year on groceries and less on dining. That said, we'll pull back to where we started, which is that across every income group, more Americans say they would rather feel 25% more healthy than earn 25% more money. So we believe this is where a lot of attention and spending will continue to go in the near future. That's it for today. My thanks to the team at Coefficient Capital for collaborating with me again on this project. Thank you to Ernest for hosting, but also for the data. Thanks as well to Luna and Instacart. Again, you can view these slides and download them and use them at newconsumer.com/trends. Please join the New Consumer, become a member. I'd love to have you. It would be great. And if you have any questions or feedback or suggestions for future research topics, we're kicking off our latest research right now. I'm at dan@newconsumer.com. I will stop sharing, and now we can grab some questions. Yeah.
Thank you so much. That was really interesting. I love seeing the Earnest data alongside of all these other really fantastic data sources. I really enjoyed actually your notes on the differences by channel in brand discovery, with like younger folks getting most of their new recipe ideas from TikTok, etc. But like there's this talk of a ban, right? So where do you think those younger consumers would go in that instance? And like a little bit of a follow-up, like short of a ban, do you think that they might leave the platform on their own due to privacy concerns? Is that just not a factor for them? It's just too entertaining. What's your view around the ban?
It's super fascinating. It feels almost unprecedented. I can't think of something similar where something so popular was essentially turned off in this country. We see it in other countries all the time, but in America, simply because of its ownership structure, especially something that's so popular with consumers. Obviously, it's happened in things like telecom equipment, but that's not something that consumers really are paying much attention to. So we did a little bit of survey research on this that did not make it into this report, and we are going to be doing a bunch more. But I could say from one of our latest surveys, about 2/3 of Americans say that they knew TikTok was owned by a Chinese company. Most of them are not really concerned about exposing their personal data to China. Only about 30%, a little more than 30%, say extremely or very concerned about exposing their personal data to China. A quarter of them say somewhat concerned, and then more than 40% say either a little or not at all. So not really, the users of TikTok, the consumers, not really concerned about exposing their personal data. And then we also asked if that would cause them to change their usage, and only 4% of people said they would stop using TikTok because of the Chinese ownership. Most people said actually the same. 50% said basically I'll use it the same. Some people said they would use it more. I don't know if they're trolling us or if they would actually use it more. And then about 20% of people said they would use it less. And then 10% of people said they don't know. So those are just a lot of numbers, but basically like about half of people say about the same, and then some people say they would use it about a little more, and then about a quarter of the people said they would use it less or stop. So we'll see. I would say, who knows? I mean, it still feels to me unlikely that it would be outright banned, but there's a lot of unpredictable stuff that has been happening over the past several years in this country, so hard to know. Facebook, I would say, has done a better job than I would have expected at really continuing to push Reels, specifically in Instagram. You know, it's something they say is really actually working for them right now. They have some trouble monetizing it, but in terms of consumer engagement, it is actually increasing. So we're going to do some more research on that on our end. I would say that if TikTok were turned off, by force tomorrow, that people would probably switch their attention over to YouTube Shorts and Instagram Reels. Perhaps there would be some sort of VPN that people might start using to watch Chinese TikTok, but I don't know if that would be the case. But it is something that, is a real thing for marketers. We've been talking about the growing, booming popularity of TikTok for a long time. Brands have been heavily investing in not only advertising on the platform, but creating organic content for it. And yeah, you could move some of that over to Reels, but it's a different platform, different social graph, different recommendation algorithms. So it's not going to necessarily work one-to-one. Some things might work better, some things might work worse. YouTube Shorts is another platform where, algorithmic discovery, tall screen video, some stuff from TikTok might work there, but TikTok does feel like a very unique thing. And if it just goes away, it's gonna be kind of a weird situation for brands and marketers. That said, one of the things that we're curious about, not just exposing personal information to China, I would say that's probably less of a concern than if the Chinese ownership group of TikTok were to start using it to somehow, suppress American ideas or make people think poorly of America and perhaps better of China or something like that. Basically propaganda and opinion shaping. And I would say that is a bigger concern, especially to me, than just, sharing of data. So there is a stronger case to be made about that. And that is some of the research that we'll be doing in our next wave.
Awesome. Look forward to seeing that. And also an interesting note, obviously wellness and health was the big theme of the consumer in 2023. It's interesting to note delivery is just part of the landscape now. It's almost a utility, as you described it. It actually kind of jives with the Earnest report, where we actually found the fastest growing online grocer customer base was lower income households right now. But you also mentioned that delivery, it's still like the smallest online portion of grocery sales, well after pickup. And Kroger and Albertsons right now are planning to merge basically, on the basis that they need to combine to stay competitive with these new services like delivery, like meal kits, which are proven surprisingly resilient. Like, how do you think that a bigger grocer would impact the landscape in that sense? Do they make a delivery play on their own? Do they try to improve their in-store experiences? Or what do you think like the grocer of the future, that mega grocer looks like?
It reminds me a lot. My first beat as a journalist was telecom, and that was during the era of the mega mergers of AT&T and Bell South and all these huge telecom companies. And basically the story there is kind of the story of what's happening in grocery. These were very regional businesses. The telecoms had been split up because of market dominance, and increasingly they just basically merged back together. And now we have several national phone brands. Some of that was the switch to wireless as well. AT&T, Verizon, those were all kind of cobbled together over the years, but now it makes sense that a wireless network would be nationwide. You could make a similar argument to grocery. Obviously, a lot of produce and fresh foods are still regional. There's still regional milk brands and regional farms and all that sort of thing. But if the interface for grocery is increasingly on your phone, the brand might increasingly become a national brand. Obviously, Amazon and Walmart are national brands. So if you're Kroger or Albertsons, you're increasingly competing with Costco, Walmart, Amazon, and you have this fractured network of dozens of grocery brands that increasingly mean less and less. Those small grocery brands are very unlikely to be formidable technology companies on their own. So and if you're Kroger or Albertsons, you have to become, at least okay at technology, if not great at it. So as far as the consumer goes, I mean, obviously, when there's more market power on one end, it tends to kind of affect the other end. So perhaps, the grocers will have a little more squeeze over their suppliers, perhaps the power to raise prices over consumers. But I would say grocery is actually a pretty competitive market. Pricing tends to work its way out. I'm really curious. To me, one of the more interesting things is going to be this interplay between Instacart and the merging big grocers. Instacart famously, of course, was a huge partner of Whole Foods, no longer since the Amazon days. But Instacart is still working with, I think the number is like 80,000 grocery stores or something like that. A lot of the ones that would be consolidated by Albertsons and Kroger. And you could make the, Instacart, there was a slide in one of our previous reports that you had sent me. Basically, Instacart does have a very high, I think the highest share of online grocery orders. You could make the case that Albertsons and Kroger over the long run wants to own that customer. It does not really want to share that customer with Instacart. So Instacart is getting into more lines of business. They're doing, they're doing white labeling of their software for grocers. They just announced recently that Sprouts is going to be using them for their advertising platform as well. So this is a big question. Does Instacart, fade into the background over time as the grocers kind of say, no, you're just going to be our enterprise software provider. We don't want you competing with us for the consumer? Or does Instacart win out in the long run because they have the best software and the best user experience, and either have to end up starting their own back end, their own grocery stores or fulfillment centers, or even their own private label brands or something like that. This is a 20-year story, not a 5-year story. So we'll have to see how it shapes out over the years. But in terms of frenemies in the grocery industry, certainly Instacart and, in this merging Albertsons Kroger giant is going to be really interesting to see that interplay.
That's awesome. I love that concept. All right. Well, thank you, Dan. Again, how can folks get access to your slides?
Newconsumer.com is my homepage. You can click on trends or just go to newconsumer.com/trends. There's several reports on there going back to the end of 2020, and all the slides are available to read and download. Again, and if there's a specific one you're looking for, or if you have any questions or suggestions, my email is dan@newconsumer.com. You can reach me anytime.
All right. Thank you so much. And thanks everyone for attending today's Earnest Talk. That was Dan Frommer, founder and editor-in-chief of The New Consumer. Thank you so much for joining us. Take care.
Thank you.